And we are live. Welcome back to the channel. Let's get straight into it. We're looking at the inflation report today. This is the inflation report for that comes in October from the previous month, right? So first off, here we got core inflation coming in as expected. Year on year core inflation coming in as expected. So you got two wins there. You got inflation month on month coming in higher than expected, and year on year higher than expected. But here's the thing: we know that was, that's a little wild. Oil prices are moving this index. You got two positives, you got two negatives, and for the most part, core is in came in line with expectations. And we're going to go over why the market ended up pulling back at the end of the day. It wasn't because the inflation report. This is actually better than I think people give it credit for, right? Especially going forward. So what else do we got here? Checking it out. Core. So you could just, if we look at the actual, if we go ahead and look at the actual, indexes together, you see core is still falling. Came in at 4.1%. Previously was at 4.3. So core is still making progress. That's what the Fed is focused on. And we got to ask ourselves, is this enough for the Fed to pause, or do they need more evidence, right? Headline came in flat. 3737. If you want to get down to the to the two decimal points, it actually fell. Core was actually weaker. I'm sorry, headline was actually weaker with oil prices spiking. So hey, that's progress again. Now it was sideways. If you just look, you can see it right there. It's just moving sideways pretty much. And most of this, right? Most of this, the month over month drops. So this is going to be CPI. Oh, let's go to the month on month. CPI month over month. You had a slight, right? You had a slight uptick in food and beverage and new vehicles, right? Barely ticking up. It's nothing extravagant, nothing too crazy. When we move over to used cars and trucks, that actually fell month over month. The month over month data is more immediate, so we can kind of see what's happening in real time. But when we look at the overall trend, we have energy still, and this was from negative energy lifting, right? That's all coming from oil. So the positivity here is that most of this inflation that did surprise to the upside is literally coming from oil prices, which is that really a surprise? Are we really surprised by oil? We can see that in real time. So I don't think that's really that big of a deal. Now, if we move over to shelter, this is the other big part of inflation. At this point, it's all about energy and shelter. Okay. At this point, all about energy and shelter. This is the Zillow rents real time data. This is the Fed's data. So the takeaway here is Fed shelter isn't falling fast enough for the market, but real time rents are collapsing, right? They're already at 3%. And I think we just continue to be positive on that backdrop. So next, why is it? So we're focused on shelter and energy, right? Which is driven by oil unless nat gas starts to break out. So look at this. This really shows you what's going on here. Okay. This is crude oil month over month. The last 3 month crude oil has been, it's made some big runs to the upside, big, upside run, upside run, upside run. But recently we have this Saudi, right? Saudi Arabia has actually is actually committing to stabilizing the oil market in a pact with U.S. Congress, right? As long as they recognize Israel to some degree, it's a pact, it's a deal. They've declared their intent to increase oil production in the upcoming year if crude oil prices remain elevated. So at this point, you did have the large fall in oil prices. They bounced, they gapped up, and they rolled over, right? Now, is it completely rolled over? I'm not sure. We'll find out if they're going to stay down. But for the most part, if they're already signaling, hey, we're going to increase production if prices are too high, I think that's very constructive for the market going forward. Here's, if you want to look in the Twitter, the actual article there, you can see it, you can find it, right? So and also adding in there, Russia's also agreed to ease the energy market if necessary. Russia's deputy of Prime Minister Novak, restrictions on oil fuel prices on fuel export will be further eased if necessary. So Russia's also participating in easing, the market, the oil market or the energy market to some degree, and that's positive news going into the next month. And what that tells us is, and I see if we have it here. What that really tells us here is, the next print in November should be pretty constructive. The next November print for inflation should be constructive. We know that shelter is coming down. Oil was dragging this higher, so we should see a big surprise to the downside come November, especially as growth is picking up. So you're going to get a good inflation report, in my view, and you get growth falling at the same time. So mostly driven by oil. Now that Saudi is, committed to keeping oil, energy prices lower or not so high with the pact, and this is probably why the attack happened, because Saudi Arabia is teaming up with Israel and the U.S., normalizing relations in Iran. If they did fuel the attack, well, that hurts Iran, right? And Iran is making money off that elevated oil prices. So Saudi stepping in there, we got that. Now, to the markets today, right? I think the biggest issue that we had today, we had an initial run up. The inflation report was positive. It was really positive, despite what you might hear going forward. Maybe not in the immediate term if you're day trading, but it was positive. And really, you just had NASDAQ pull into the bull flag resistance, right? We had that technically, this has been resistance. We just pulled into that trend. We could come right back down. That's totally fine, but it's accumulation zone. This is the accumulation zone. We're forming a bull flag here. And today, after that, after everything came out, you basically had yields up, dollar up, stocks digesting the news, and then finally they rolled over at the end of the day, and oil down. And that's the big constructive part here, is that oil is down, bull flag for the S&P. And look, the actual target for probability came down. The market is actually pricing in a better chance. First, it was, pricing in a hike. Now the market is seeing this, and it's actually saying, hey, there's less likely chance the Fed hikes in November. Nothing here really signaled November hike, right? In my view, the inflation report wasn't enough to get the Fed hiking. Okay, yields are doing the work for the Fed. And we saw 30-year yields starting to break out, actually. And so I think that's what we're staring at here. And we'll get to the Chainlink news also, right? Also on the earnings front, let's get this in view. S&P 500, right? S&P 500 SPX Q3 earnings growth is revised up, led by industrials, materials, technology, consumer discretionary, or in other words, cyclicals, fiscal policy. Those are all, sectors that are related to the fiscal policy. So earnings growth is picking up, fourth quarter rally, right? I still think we got that fourth quarter rally here. Oh my God, the inflation was so bad. No, point out to me where inflation was so bad, where it's so terrible, especially looking forward. Inflation is actually improving here. The technicals were just overbought, heading into resistance. So we're going to pull back. You're not just going to run straight, right? We got earnings tomorrow coming in. Also, so what is it? Today's correction was driven by technicals at the top of the range, led by QQQ, right? Strong yields, strong dollar. Now yields did rip pretty high at the end of the day, and we're going to go through that. Key takeaways: the Fed is more likely to pause. Energy is more likely to pause. First off, the Fed is more likely to pause. Very bullish. Okay, energy is diverging. Energy is rolling over. Oil is rolling over. Okay, which sets up a CPI rollover in the next print. Okay, it sets up CPI to rollover despite what the Fed does. That's my clue. Earnings are set to be in growth. So earnings improving, inflation improving, and the Fed is likely to pause. That's enough to, for the buyers to step in. They've been stepping in pretty strong when the index comes down. Plus the S&P is just up for like 3 or 4 days in a row. Santa Claus rally is still intact. Let's jump over to the charts here. Let's actually jump over to the charts and check this out, and then we'll get to the comments, to the questions, concerns, XYZ. So let's jump over these charts. What up, carbides? Inflation. We got carbides here. Inflation is trending down overall. I don't think this data alone merits another hike. I'm still pricing in one more hike, but I think the market is also pricing in the low possibility of a quarter basis point hike. Yeah, agree 100%. And I think more than anything, it's possible the Fed just, hikes in January, right? All the data comes in for Christmas, and they're like, oh, we got to do one more hike. And they do one more hike, and that's it. I mean, I don't know, but one more hike is not that big of a deal if you're constructive going over the next 6 months, right? It's not that big of a deal. If you do get a recession, it's probably in 2024 if it happens, if fiscal doesn't step in, right? If fiscal policy doesn't step in. Overall, I agree with the expectations of a pause. Yeah, I think we're going to pause here. Okay, now let's look at what kind of happened here for S&P. First off, the Qs are leading again. Okay, the Qs just came to the top of the channel, right? Top of the of this giant flag. This is a bull flag coming from the lows, right? You're getting a big bull flag here. Well, we hit the top. We bounced off pretty hard. Okay, so if we just trickle back down to the bottom, I mean, nothing really changes here, right? Maybe we don't even go to the bottom. We have some support here. Obviously, we got some support here at this what is this, about 360 on the Qs. So I'm looking at Nasdaq here, and then if we look at SPY, still never filled that gap, but you finally got the pullback. Now, that's not abnormal, right? Not an abnormal pullback for SPY. Okay, because we were up 1, 2, 3, 4 days in a row, up 4 days in a row, one pullback, and look, we actually supported the trend. This is very bullish. I think people step in here because the inflation report was better. If you disagree, let me know. The inflation report was not that bad. We looked at, it's literally led by energy as usual. It's led by energy. And growth is not falling apart, right? Employment is still strong. We'll go over the macroeconomic cycle and the premium stocks that the market's probably going to pick, right? Not the actual stocks, but the recipe for this market to go forward. Okay. And also looking at, if we switch over to the yields, well, 2-year yields did jump a little bit after this report. 5-year yields jumped, 10-year yields jumped. And what is this all? And look at the 10-year yields were a little stronger than expected. They swallowed the previous candle, but this is not like a stock. So they jumped, you know, shorts stepped in, bond market fell. So if we go to TLT, big drawback on TLT. Also though, keep in mind, the Fed is saying, hey, the actual yield market, the bond market, right, the yields is tightening for us. So as long as the yields do come up to some degree, is doing I think the Fed is at pause right here, right? And the Middle Eastern war also creates a recipe for a pause. And you know, if Saudi Arabia is going to step in and increase production, if Russia is going to step in and ease oil markets or energy markets, well, that's a good setup going forward, right? As long as things don't accelerate and you see, you know, you have more uncertainties coming in the market. And you know, oil, look at this backdrop on oil. This is really what I'm focused on too, is all these other months oil was moving higher, and that came into the inflation print. This doesn't do it justice because I don't have it marked up on here. Oh, actually, I think I have it. See, do I have oil marked up here? Because oil is going to set up a very good, and I know I just said this, oil is going to, here it is. Oil, right? Oil prices are going to set up for a good inflation print. You're having oil ease here this whole month. Now, if we get back to the highs, it's going to be, you know, break even. But for the most part, if oil does just trade sideways here at this level, then what are you really getting? You're getting a downside beat. Shelter's already coming down right into the month where growth is expanding, right? Where manufacturing is picking up, where new orders are picking up, where construction is picking up, where services are a little muted, but they're probably going to pick up because it is the holiday spending season, seasonal jobs, seasonal employment. So that's what I'm looking at here. Let me know what your thoughts are on that. Any thoughts on that? And then we also have some news from Chainlink. We got some new news for the real world asset tokenization of everything. But before we get there, look at the VIX. VIX still below 20. Okay, very constructive. VIX below 20. Once we get above 20 and hold, we might have an issue there. We're not there yet, right? Keep in mind now the volatility of VIX is stepping up, and so that's not good. Q volatility, Nasdaq volatility is muted. Bond volatility is taking a pause here. You don't want to see this, you know, rise too much. Bond volatility taking a price. Credit risk, equity credit risk is flat, whatever. Put to call ratios came down. Junk bonds pulling back a little bit. We know the yield curve inverted a bit. S&P, look at the S&P technicals are solid. We did we had the cup and handle, right, where the handle was actually bigger, but we broke out of that. We broke out of that. We pulled back. We supported the level. We're supporting that level, which also happens to be trend support. So technically, I think the buyers are still there. This pullback was from the Qs hitting resistance. Okay, so the Qs either come back here or 360, or they come back down, right? That's what we're looking at. Dow, what is the Dow looking like? I mean, the Dow is the Dow. The Dow is, you know, it doesn't have the best setup for this environment going forward. IWM just moving sideways. If it starts to make new lows, we might have some issues there, but it looks straight to me. Let's see how many. Oh, that's nice. Okay, this is bullish. We didn't see this. How many stocks moving above the 50-day moving average? This is market breadth. We are getting market breadth here. More and more stocks. We were at 6%. Now we're at 33% of stocks moving above the 50-day moving average. Market breadth is turning up. Okay, regardless of the initial weakness. Keep your mind on market breadth. You want to see this overall strength and weakness. Looking over to Bitcoin, Bitcoin's pulling back, Ethereum's pulling back. Ooh, Ethereum making new lows. Great buying opportunity in my view. Probably going to get a nice fourth quarter rally here. Chainlink pulling back. And this we're going to go over in a second because the setup is beautiful for Chainlink. Okay, Tesla pulling back. Tesla wedging hard here, right? Just pulling into the wedge there if you're looking a little longer term. KRE pulling back. I think communications are still leading this market. Let's double check. Yeah, communications at the highs. Okay. AMD is breaking out. Let's take a look at AMD here. S&P 500 at 42. At 42. Okay. At 42. So you got this is an opportunity for AMD. AMD is now breaking the trend. You want to see a pullback and a support for AMD. This is a nice setup for AMD, right? Does AMD have anything to do with consumer spend slow in Q1 of 2024? No, I don't think so. I don't think so. Not really. I mean, no, it's all B2B. It's all semiconductors. You're gonna get that fiscal policy come into play. So what I would want to see here for AMD is a pull in to the trend that is leaving the downtrend, right? You're getting a breakout in the downtrend. And let's see if we have RSI here. If we look at the RSI, it's starting to lift back to the highs. We want to see the CMF data. Well, I'm not going to explain that, but it is pulling back. So you want to see some support here on this initial push higher. Where was that volume coming in? The volume came in here. I would say you want to see a push into 105, a sharp pull into 105 and a bid pretty quickly into 105 for AMD, right? Looking at AMD there. So that's my view on that. Now, looking at the cycle here. Okay, let's take a look at the cycle. What do we got ahead? What is it that we're looking at going forward here? Let me take a drink. If you guys got questions or whatever, I still think we're in the bull market. Inflation came in pretty nice. Okay, it wasn't bad. It just wasn't great. Yeah, it was higher than expected for the headline, but core came in line. That's what are we not focused on core? Aren't we focused on core inflation? Right, we're focused on core inflation, came in line. And it actually came lower on a year-over-year basis. And the only thing keeping us back was oil. Well, oil's starting to ease now with the Saudis. All right, rates are up, but the rates do the Fed's work for it. So Santa Claus rally still intact. Why? Economic activity is still recovering. Okay, services are still expanding. They're still above 50. Manufacturing is the part of the of the economy that is starting to lift. That was in recession, now it's starting to lift. Construction spending, I think it's being driven by construction spend still positive, right? Multifamily building still positive. Real estate building still positive. Maybe not family homes, but definitely. Oh, okay, user. I don't know. Bro, what? I'll answer that later. So anyways, multifamily home building, ISM new orders are starting to lift. That leads the business cycle. ISM production is picking up. Unit of labor output is starting to pick up. Okay, onshoring supply chains via fiscal policy. So we're onshore. Manufacturing is picking up. Those are the bigger items. That's those services aren't really the heavy. They do lead the economy, but manufacturing is where you get the big items like cars, housing, whatever it is. Multifamily housing picking up, right? Consumers, let's move to the consumer. Consumers are showing seasonal strength. We talked about this yesterday. They're still going to spend. I mean, if you think consumers are just not going to spend, they're going to spend more in the fourth quarter than they will in Q1 of 2024. That's why I think we have the Santa Claus rally. That also gives us employment, strong employment, right? Jobs, seasonal jobs, maybe not career jobs, but seasonal jobs going forward. Housing and real estate in general is still in recession. So you're not really, that helps with the shelter inflation that is coming down. Liquidity is weak. Inflation is so inflation is tame. We just saw the inflation report. It's still tame. 3.7. Oh my God. Inflation came in. Last month it was 3.7, came in at 3.7. So it's moving sideways. So it bounced and now it's kind of just moving sideways, right? The question is, does it move sideways and then move up? Well, if it's driven by oil and we just saw oil collapse, that sets us up for a good print going into the next quarter. Excuse my burping. But I drink a lot of coffee here. And anyways, let's not get off topic there. I'll answer your questions. Let's talk about the market here, not the beard, blah blah blah. Okay, there we go. So let me run through this again. Let me continue this and then we'll get to that. Inflation is tame. Liquidity is weak, though. Liquidity is weak, but the reverse repo facility is still coming in. Okay, you get the RRP, which should run out by June of 2024. So shadow QE still online. FedNet liquidity is recovering slightly. I think we're going to get a liquidity burst here as things start to slow for services. I think we're going to get a liquidity burst. Maybe it's in Q1, which is why I don't know if we really get a big recession. I just don't see it yet. It could come, something could break, but the Fed steps in, right? Anyways, next, macro forces are starting to peak. Yields peak. Now yields went up today. The dollar bounced today. We're going to take a look at the dollar, but I think they're stabilizing here. Yields are stabilizing at a higher level. The stock market can feed into that. It can look past that as long as they don't start to surge, going forward. So I don't know if they actually surge going forward. Volatility at a local top. Technicals are still bullish. We're looking at that flag pattern form for the Qs, right? For technology. Fundamentals are recovering. We just saw that earnings are revised up for Q3. Q4 is going to be even better. The real weakness comes in 2024. Okay. Positioning still bearish. People are still bearish. They're still negative. We saw a couple charts on sentiment is very negative, and that sets you up for a big bull run. And monetary policy is tight in some areas, loose in others, but fiscal is still accommodative. And then what stocks, who's going to benefit from this? We'll get to that next. What did you think of the last FOMC? FOMC was Billy Pruitt. Thanks for having your actual name on there. I want to be able to identify you guys by your name. Bro, I still have my beard. What I did is I shaved this thing because it was getting in my way, and I was like, damn, that looks weird. So yeah, that's probably what you're seeing. It looks weird. Anyways, what do you think of the last FOMC? So it was bearish. The FOMC was pretty bearish. There was a lot of dovish language. A lot of their language was careful. We want to be careful. We want to be careful. And what have they been signaling to us? They've been signaling to us that the yields are doing the work for the Fed, and they want to pause here. They want to pause here. Black Swan today. Overall, I agree with no Black Swan. It was over position on the Qs. It was a pullback on the Qs. Technically, the Qs pulled back. We'll look at that chart. Actually, let's look at it while we get these questions come in here. This is all it was, Bukowski. I know you're just playing, but this is all it was. It was, I mean, it was anticipated. I actually shorted Tesla today, and then I covered because it broke out, and then it falls at the end of the day. I was like, damn it. So you got to be careful, but either way, I'm still long Tesla. This was it. We're running into resistance on the Qs. Okay. Actually, let me take a look at this one. I have this one marked up a little better for us. I think Qs lead the rally, obviously. And this is what we're looking at, Bukowski. Why does it automatically switch to that? I don't want it to look like this. Let's go here. Yeah, there we go. So that's all it is. We ran into, the flag, the bull flag pattern is bullish because we're coming from the lows. We ran into the flag pattern. Okay. We're going to turn on the SMAs. Is this okay? Is this the daily? Did I mess with these? Hold on. Let me double check these. 50, 100, 200. Okay. Yeah, we're still below. We're still below, I guess, on the Qs. That looks bearish. Well, that looks bearish. We technically, this tells us we should come back down here. Does it happen going forward? I mean, the market is saying the Fed is going to pause here. So I don't know. Maybe we do come back down here to find. It would be more constructive for the market overall because you're getting lower prices where, buyers really want to get long. Everybody's getting bullish going into the fourth quarter also. They're getting more bullish. There is more negativity, but the opportunity is starting to increase here in my view. So FOMC was bearish. A lot of language to say, be careful, really. And we talked about that later. I think I posted that on my Twitter. So again, let's see, don't want to stall it too much. What did we say about FOMC yesterday? What was it about FOMC that we said? We said that the FOMC, see if I can find it. Oh yeah, right here. Participants saw below trend growth going forward. Balance sheet runoff could continue. They're saying they can cut before they actually pull the balance sheet. Who cares? Let's see what they actually do. They're more likely to pivot on rates before injecting liquidity. Several participants see near or at peak rates, 25 basis point hike maybe in January. Maybe they never do it, but the hike probably, the Fed, the market does not believe them. So FOMC meeting was very dovish, which is why we saw inflation reaccelerating, oil spiking. Dima Yush, what are you smoking, bro? Okay, we got Dima Yush on here, right? I don't know what he's smoking. He's smoking crack over here. Bro, what are you talking about? If you're talking about the future Black Swan event, sure, Dima Yush. Oil just dropped, bro. Look at this. Like, what are you smoking, man? Give me a better analogy here. Okay. Dima Yush. All right. Oil just went from 95 to minus 14% to 81. Okay. And then it bounced to 87. And then are you guys watching the charts? Now it's back at 83. What are you talking about oil spike? Unless you're saying the oil will spike in the future. But we just talked about Dimayush that Saudi Arabia is going to be easing the market for the US. They just talked about this, that they will increase oil supply if they have to stabilize oil markets. So I don't see an oil spike here. You're betting on a low probability bet if oil spikes. This is not a global war yet. Okay, if the war accelerates, then yeah, then we get that. But no, that's not what's happening. Inflation is not reaccelerating either. We just saw, if we look through the actual items, so people can know, right? If you go through the actual items, like we just went through it, I'm gonna pull the items up. The items are flat. Everything is flat. Everything's flat. I mean, your headline CPI was 3.7 last month. It's at 3.7. What are you talking about reaccelerating? Oil's coming down. You need oil to really spike for that to happen. That is not happening at the moment, Demiush. Tesla losing market share and operating margins. I mean, it depends who you ask. We'll see. I don't think they're really losing market share. That's silly. They're gaining market share. Maybe in the near term, there's a lot of reports, calls or puts. I mean, I don't do that. Calls or puts. I don't just say calls or puts. That's kind of silly. What do you think of JP's speech about the economy, not necessarily interest rates? Who? Jay Powell's speech about the economy? Oh man, no way. No way. Got a violation. Okay. I might get kicked. Did you report me, Demiush? Bro, don't tell me you reported me. I got a violation for harassment. Somebody just violated me for harassment because I said you're on you know what about oil going up. Bro, you guys better not be. Okay, I hope that wasn't you. It was probably TikTok then. Okay, I said I got a harassment. Oh my God, too sensitive here. Okay, good. I didn't think you were like that. Nah, okay, it's not Demiush. It's probably just TikTok then. Either way, what do I think about Jay Powell's speech about the economy, not necessarily interest rates? I mean, that was a while back. He hasn't really spoken. I think they're saying the economy is still strong. Look, let's just use common sense here. The Fed knows the economy is going to be strong. They've been saying the economy is stronger than expected. It might come in stronger than expected. GDP is back up to 5%. Q3, if we look at the Fed nowcast, okay, that's what we're looking at here. And I would say that they know that growth should fall off a cliff in January, Q1, because all the seasonal spending will be over. Seasonal employment will fall off. So the Fed is probably looking, they could hike this 25 basis points. I don't think they do. So I think the economy is strong. I think Powell is saying, hey, it's going to be strong through the fourth quarter because of seasonality, and then it'll start to weaken going into Q1, Q2, Q3. I'm thinking February, the market starts to price it in. Kind of like last year, there was actually a chart that showed that, I'm going to show this chart. There's actually a chart that showed how the S&P looks exactly like it did last year, or 2022. It's kind of repeating. I'm going to find it for you guys. I'm going to throw it on here so you can see the seasonality. This has been a year of seasonality, positioning, sentiment. Also, what else do we see? They also revised savings, excess savings higher. So they just added $1 trillion of excess savings back, bro. Damn, where's that chart at? I thought I saved it on here. I didn't repost it. Damn it. Thought I reposted it. Oh well. It's not in the cards. Bukowski, buy the dip, 100%. Buy the dip on whatever you like. You think we're testing the low? I think we might do a cup and handle on ES. Okay. All right, let's take a look at ES. I haven't looked at ES yet. S&P futures, ES. Cup and handle. Yeah, we might do a cup and handle, but check. I mean, look how bullish this is. We're really just pulling it. And the reason I say bullish is because if you understand that seasonal spending is here, that Q4 is going to be strong, that earnings are up, that the Fed might pause, if you believe it, maybe you don't have to believe it, then you know the dips are where the bullishness is at. The dip, the moves up into the trend are not bullish. You're buying on the dips at the lows. So it looks like a little cup and handle here on ES. I can see it, cup, handle, and supporting that cup and handle right there. Watch, I'll zoom in for you guys to see a little better. All right, and then let's mark it up. Here's your resistance, right? Here's your cup and your big handle. Breakout, pull back. Oh, pull back and support. Okay, pull back support, maybe hold the trend. Watch, we fall out tomorrow. And then at the same time, what are you getting? You're getting a hold on the trend, the uptrend that's been, well, I guess this is, oh yeah, no, that is the uptrend. You're getting a pullback into the uptrend. So this is nice. I see that. I see what you're throwing out there. All right, what else we got? Indeed, people are bullish now. Perfect bull trap, though. True. Perfect bull trap. I think it's going to come down to what data do we have going? I don't know. I think the market's going to digest this data over the next couple of days, maybe Monday, and say, okay, we're still bullish, but premium stocks, right? Maybe not them all, but premium stocks 100%. All right, Demi. No, Demi, you're good. You're good, bro. I was just checking. I'm gonna call you out or call anybody out if they act like a fool or a wuss. Don't get on this channel if you don't want to be criticized. If you want to criticize me 100%, go for it. Tell me I'm full of trash. Whatever it is, I don't really care because we fight with facts here and probabilities and you know what I'm saying, not emotion. So I do like criticism. If you guys got criticisms, let me know. Don't be afraid to criticize me or criticize my thought process. Maybe I'm wrong about something, right? Iron sharpens iron. Let's go. Bonds sold off a lot today. Dollar up almost 1%. Thoughts? Okay, good. Let's get to that one. Let's get to that one because the dollar actually, you know, obviously bonds, yeah, sold off hard. Now here's the trend for DXY. It did break down, and I was like, oh shoot, this is a perfect setup below at 55. What do we say? The actual support was 105.50, and we pulled right into 105.50 and supported. So the dollar came in strong. That was a big candle. What does the volume look like? No, I'm just kidding. There's no volume on the dollar. We'll look at futures for the dollar, but it could get rejected here, right? It's pulling into the trend. This could be one last, you know, hail for risk off. And it really depends for the dollar anyways. 105, we know 105 is the level we want to see break. Okay, we want to see that break down. It is sort of breaking out here, but it's all led by yields and bonds, right? It's all led by yields. So the real question is, are yields done going up? Not today, but have they peaked? Have yields peaked? This is what you want to look at for the dollar. Have yields peaked? They could come back up here in the dollar strength, but if yields have peaked here, the dollar is going to roll over, right? I'm 90% sure if yields have peaked, the dollar rolls over. 10-year yields, they came over the last 3 days. 2 years had a, you know, little, I think 2 years done, right? 2 years are up because you still have reverse repo liquidity, right? Over here, let's go to the, what is it? Net liquidity. No, not, there we go. Look at net liquidity is picking up. We're bottoming with liquidity. I'm telling you guys, the setup, more than 75% in my view, the setup is liquidity comes back. The economy rolls up. New orders and manufacturing picks up. While you still have a rolling recession in banking, something could break. That's perfect because inflation stays tame. That's perfect because the Fed can still print, because fiscal policy can still come into play. You want weakness and strength at the same time. And the stock market's going to be weak in certain areas, retailers, commercial real estate, banking, but strong in other areas. And what do we see in industrials, materials, technology probably has the best outcome. Move up. So the scenario is a really great setup for a Santa Claus rally. I'm not looking into 2024 because, you know, you can only look so far ahead. But for the most part, I think we are setting up here. That was liquidity. I didn't even show you the reverse repo shadow QE. Here's shadow QE. Shadow QE, new highs, bro. New, just chugging higher. That is shadow QE. Let's go. Right? They're sucking up all the bonds on the short end anyways. Yes, we do have a lot more issuance, but we're going to find out how that actually plays out. Bonds sold off. Oh, we went through that. After his speech, I saw dollar strength, which leads me to believe that's why the dollar got stronger. Billy Pruitt. What speech are you talking about? Are you talking about the FOMC yesterday? Did Powell speak today? I don't think Powell spoke today. Or did he speak this week? Maybe, am I misinformed? Am I tripping here? I don't think Powell spoke. Fed Harker, maybe you're talking about other Fed presidents. Last OMC. Oh, okay. Last FOMC, not the minutes. Okay. Well, I mean, that was a while back. So, I mean, listen, right now the macro is so important. It's so slippery. It's so slippery that you need to track the speech, what happens after the speech, how the data changes. Right now, my outlook on the Fed, on Powell, is he's basically communicating that we are making progress, but it's not done yet, which he's saying nothing there. The other part is he's saying, look, I'm focused on core. He's focused on core. Core just went lower from 4.3 to 4.1. It's gonna be in the threes, I think, pretty soon here. Maybe it sticks a little bit around 3.9 because of the seasonal spending coming through. So that might be kind of sticky, but I think they're gonna leave 25 basis points on the table because seasonal spending. So your biggest issue is inflation's not going higher as long as oil doesn't spike, but it could be sticky in the fourth quarter. Why? Because I mean, seasonal spending, right? Seasonal employment. But if productivity picks up, here's the golden goose. If productivity keeps picking up, so each good and service produced per unit of labor, so 1 hour of labor produces more goods and services, inflation actually stays tame. So I think it's a really good setup, and then inflation really starts to come down with growth, and then you have a reaction. So I think overall, Powell is just trying to manage both sides, and he's saying, hey, the bond market is doing the job somewhat. Well, some of the Feds has been saying that, and he's looking through it. So stronger than expected economy. Does that call for another hike? Maybe. If productivity doesn't pick up, yes, but if it does pick up, then we're solid here. And also, yeah, so I don't know, it's tricky. It is tricky. That's all I have to say about that. But that was a while back, bro, on the FOMC. All right, Bukowski, what did you got here? I think we're testing yeah, I already went through that one. Indeed, people are bullish now. Already read that. Carbides, that was a big move on the dollar. Yeah, that was a big move. I didn't check the DXY this morning because I woke up at 3 minutes before the market opened. I think I didn't set the alarm. That's why I don't day trade early. My emotion, I'm not awake yet. I get too sucked up into the market. Only if it's like the perfect setup. But the dollar did make a giant move. That was a big move for the dollar. That was a big. Ugh. Oh, there it is. That was a pretty big move for the dollar. But I think again, like I said, I mean, it's gonna come down to rates. How high do rates actually go here? The dollar could move back to the highs. Rates go back to the high, and you see S&P pull back, right? Pull back, a Qs pull back, or maybe not. Now, who's leading the Qs here? Premium stocks, which we're about to go down. Crypto's dipping a little bit. Premium stocks. So who? Apple, Amazon, Google, Facebook, Tesla. Apple at the top of the range, right? Apple in this bear flag, not bear flag. This is a bull flag for Apple. Does it break out yet? What gets Apple to break out? We'll see if we get sideways. If we get sideways action here in Apple, it's going to look like S&P. It's going to look like NASDAQ. Very bullish. But if it just pulls back, we're going back to the bottom of the range, and then we will see where the buyers actually step in. Earnings on Friday. So JP Morgan, big banks, BlackRock. You have the biggest asset manager reporting, BlackRock, and you have JP Morgan, the biggest bank, reporting, who are both bullish on Chainlink, who are both going to be using CCIP, who are both tokenizing real world assets and cross-chain interoperability. So the biggest bank in the world, the biggest depository securities settlement, facility, well, DTCC in the world, the Swift, the biggest messaging system in the world. Like, bro, all these point to the XRP. People have no argument. I'm sorry for XRPers, but you're kind of screwed here, XRP. Okay, you guys that are in crypto, most crypto people have no clue what's happening here. They're just bullish on the coin. They just talk about the future of money. They have no clue what they're talking about. Some people know what they're talking about. Okay, don't get me wrong. But anyways, we have banks reporting on Friday, and that's going to be, we'll see how that, look at, they're all tokenizing their assets to increase their efficiencies. So let's see if they talk about that on the earnings calls. Google, Alphabet moving higher. This is due for a pullback. So I think we might get that pullback. Meta breakout starting to pull back. Like big tech, right? The Magnificent Seven are strong except for Netflix, but some people don't put Netflix in there. So maybe we do have this pullback, right? Netflix is just tanking. Ooh, Nvidia should slow down here. Damn, I should have kept my short on Tesla. No, I'm just kidding. Who knows? You might get some crazy news. Tesla, what do we still got, what, 30 minutes? Tesla pulling back. I mean, this thing is wedging very hard. So it depends, how you want to look at it. Wedging pretty hard there. A failure to retest the bottom of the range in a lot of these bullish patterns will be a huge indicator for more upside. Are we talking about DXY? Okay, I see what you're saying. A fail, yeah. You're probably talking about the Qs and S&P, right? Qs, S&P. Dude, and AMD, I mean, AMD is giving you the golden nugget there. AMD is starting to push pretty strong. All right, ARK is looking weak, unfortunately. Interest rate sensitive stocks kind of suck right now. And let's see who's going to benefit here, right? You have Meta breaking out. You have earnings set to go higher, to get revised higher. And this is what he means, right? We're in this bear flag. We're looking at a bear flag, obviously. And I think this is what Carbides is pointing out. Not bear flag. We're in this, what am I saying? We're in this bull flag. and this is S&P 500. Yeah, let's stay with SPY, right? A lot of you guys like looking at SPY. If we hold 430, very bullish, because then we'll be back on the trend. So this is really a critical level here, right? Here's the uptrend. So we slipped below the uptrend here. That's bearish. We got right back above it, very strong. Okay, we didn't fill the gap yet. So if we continue to hold this stair step, right? If we can continue to stair step here, we could even pull back and test this. That's very bullish. That's very bullish for S&P. If we break down, then we could be retesting. That won't look great, but you still have the 200 moving average as support. So, oh, that would be bad if we came all the way down there. So you still have the 200 moving here, right? It would just be more accumulation. If you look at the Qs, NASDAQ, who outruns the, if you look at NASDAQ never even came back down to the 200 moving average. Wow. So NASDAQ, same thing for NASDAQ. You probably want to see the trend hold to the upside. Let's just put it here. Let's be conservative. You want to see this hold, this 360 level, 360 to 361 level. Be careful out there, Chavez. Oh, dang, you must be bearish. Chavez must be bearish now. Depends on your time frame, right? Depends on your time frame, really, to be careful. I mean, if you're looking over day to day, yeah, you better be careful. If you're looking year over year, yeah, get a better entry price. Always be careful. I mean, don't get me wrong. When you're driving, be careful. But when it's time to push the gas, you got to push the gas because you're going to miss the blow off top like we had last time here. Everybody was like, be careful, debt ceiling, boom, market breaks out. Also, keep in mind here, a lot of fund managers here, I'm going to read this to you guys so you guys can see. Also, I'm bullish. I'm not going to lie to you. Pretty bullish here. We supported the 200 daily moving average. Earnings are starting to turn up. A lot of people are still negative. Be careful. Oh my gosh. Now, the real risk is going to be geopolitical risk. Okay. Geopolitical risk is the big risk in my view. Okay. So where is that chart at? Here it is. Okay, here we go. I'll show you guys this really quick. This is going to be positioning. I always try to use positioning and sentiment to understand kind of how the market is positioned. Okay, here we go. So this is CTA positioning, US equities. You see positioning is very negative, below zero. Last time we were this negative was October, market bounced. People are very negative, and then they got positive. So we're lower than we were CTA positioning, commodity positioning for a while. So here's what Raoul Paul says. I'm still guessing that we get a big squeeze, all-time highs in Q4. Probably not crypto, but S&P is really close. Qs are really close. Let's see. Market is so bearish and so underweight that often sets up year-end benchmarks chasing 5.5% yields won't appease your pensions. So that sets up people who need to be in NASDAQ, who've missed Apple, Amazon, Google, Facebook, Tesla, who've missed the retracement, NVIDIA, who've missed that. They're going to have to get their benchmarks in or they're at risk of getting fired. So what happens there? Well, they got to appease their pension holders. Most people want to be in the secular stuff here, right? Blockchain, well, that one's not popular yet, but AI is the big efficiency, AI, robotics, EVs, whatever it is. The secular trends, they want to be a part of that. So I think there's going to be chasing here. That's why I'm very bullish too. There's going to be chasing into the fourth quarter to show the whole year, hey, we were exposed. So I think we have chasing. I see more variables, very bullish. And he basically says here to appease or to satisfy your pension holders when the NASDAQ is up 38% and you haven't participated and the Fed is clearly done here. I know a lot of people say it's not clearly done, but the Fed is, set up to be pretty done here. Okay, before we're gonna get to this this JP Morgan news pretty soon here, and then we'll go through we'll get back to your guys' questions. Am I bad on the volume yesterday? I messed up on that. Bukowski, DXY worries me. 106 is key level. It sure looks like recent down move was fake. Yeah, but let's put all the Bukowski, let's put all the variables together. That was a big move from DXY, okay? But it came right after an inflation report that kind of scared people, right? Yields rose a little bit. So the dollar is a little edgy here. Also, oil dropped. Oil pushes up the dollar also. So is it really a risk off move into the dollar? Or is it we sold a bunch of oil because Saudi said that they're going to increase production if they have to? Saudi is basically Saudi Arabia. Am I getting that right? Yeah, Saudi Arabia. What am I thinking here? Saudi Arabia is basically saying, hey, we're going to stabilize the oil market. A lot of traders, they get out of their trade and they go into dollars. I think that could have been it. Or you just got to weigh it out. I'm not saying that's it. You got to weigh it out. Also, are yields going to keep climbing after this report? Maybe, maybe not. Maybe the dollar consolidates at 105.50, 106, 105.50 for a while. Very great possibility. I don't think it breaks to new highs though. I'm not seeing a break to new highs for the dollar. So yeah, stay cautious. Just watch those levels. What did DXY? What up, Yasin? Bro, what did DXY make to move this much? Core was like forecast. Oh, you're saying why? Okay, why? Why did DXY move so hard? If I got it right here, I think the DXY didn't move to the second half. Let's take a look here. There was something that came into the market here. Let's break this down into the 30-minute chart. Okay, and let's go to the dollar because we got the forex traders on here trying to figure this macro out. Oh, good comment there. What do you think about dollar being softer after the tensions in Israel? It's a safe haven. Yeah, the dollar, if once things start to slow down in Israel, in the Middle East, the dollar will drop. And really it's been yields or bonds that have been the safe haven. I think I could be wrong about that. Could be yields. Let's go to the dollar really quick. So I think early morning, let me see. When did the dollar spike here? Did the dollar spike right off the bat? Oh, okay, it did. Okay, the dollar did spike. So the dollar spiked because inflation came out hotter than expected on the headline, right? We got hotter than expected headline inflation here. Let me see. Let me talk you through what we saw here. Even though core came in line, ooh, that's a lot of missiles, man. There's some crazy stuff happening. All right, so yeah, so we had core inflation come in line. That was good. Core inflation year over year came in line. So I was off. I said, hey, if core, who cares about headline? Let's focus on core. But the market did react to that. Something else came into the market also. I think it could have been Nasdaq at the top of the range. It could be oil dropping, oil making the drop. The fund, going into dollars. So the dollar did rise here. Yields, I know yields didn't spike till later though. I'm pretty sure I was watching yields. Yields didn't spike till later. Am I wrong about that? I guess yields were up too right away. Yeah. So also keep in mind that the Nasdaq was out. The only explanation I have for this moving up was that headline inflation came out hotter than expected. You want that in line. And inflation rate came out hotter. I still think it was a good report. I think this was an overreaction. Oh, it was Shelter, bro. Shelter didn't fall um as fast as expected. Shelter did not. What else was there? Was there something else? I mean, the Qs were in a bull flag. And this is really where the market gets tricky because the market actually is pricing in more chance of a pause here. So rates should actually be down. Rates should be down here. The Fed is the market is pricing in a pause. All right. What do you think about what could you teach in a minute or two about bonds and yields and why they are important? Oh, Billy Pruitt. That's a good question there, man. Let me get through these guys' comments and then I'll answer you. So yeah, Yassine, um, the only explanation I have for this data coming out and the dollar actually going up on a better inflation report is that Shelter didn't fall as fast is wanted. And really the Qs were at resistance, right? The Qs were already at resistance, so it was kind of like a positioning thing. Like, all right, let's unload a little bit and find some more support. Other than that, I mean, shoot, the market does crazy things, so you got to be careful. You got to be, on edge. I would say if headline came in line, then it would have fell. But I think headline spooked a lot of people. The core was good though. The core was good. So for equities, that's great. But if you're a forex trader, that wasn't the best signal. So I said, hey, focus on core, and I was wrong. I thought it would do the opposite. You're not always right. The dollar pump could have also been fueled by short coverings because it had an obvious bear sentiment. Okay. Okay, yeah, a lot of people shorting the dollar. And they probably could have seen that inflation and covered their position. So there's other reasons. Do I think it lasts? Not really. Was there any Fed speech? Let me see if there's let's dissect this. Oh no, I didn't want to go on that one. Let's figure out, was there any Fed speech? Because yeah, the hikes are down. The hikes are down. So what the hell spooked the market so bad? Other than technicals, right? Let's see, was there anything out today that could have also, and then oil was down. I would say this, people are in Nasdaq are collecting profits a little bit. We saw the S&P pull back. You have oil covering, so that goes into the dollar, right? They're covering their oil positions. Oil dropped. That could have been it, and it could have been shorts on the dollar covering, and then dollar goes up. That's all I can think of here. But was there anything surprising that we saw? Commercial real estate risk of growing? Not really. And then Russia coming out saying, "Hey, we'll supply more gas." Um, so I don't know. Russia's deputy Novak says restrictions on fuel exports will be further eased if necessary. So maybe the market kind of got scared in the energy market and basically sold into dollars because Russia and Saudi is basically saying, "Hey, if we need to increase production, we will." That's the only explanation I have, man. What is QQQ? QQQ is the Nasdaq, so the technology stocks, the only equity part of equities, the only equity index that actually outperforms the Fed balance sheet. That's what QQQs are. It is an ETF for the Nasdaq 100. What up, Hassan? So yeah, that could have been it. That could have been it there. Anyways, Billy Pruitt, what could you teach in a minute or two about the bonds and yields? Well, I mean, bonds and the bond market is very important. Here's what you need to know. The base knowledge is you have bonds from 3 month all the way to 30 years, right? 3 month bonds, 2 year bonds, 5 year bonds. Bonds, another word for bonds is US treasuries. So you hear treasuries, those are bonds, right? Same thing. And basically it's government debt. So when people buy bonds or buy, US bonds or US treasuries, they're buying government debt. Why? Because they're going to get paid. They're going to get paid fixed income through owning the debt, right? That's where they're going to get paid. On the flip side, the price of the bond moves inversely with rates. And when I say rates, I'm talking about 10-year rates, 30-year rates. So if you buy a 10-year bond and that price goes up, the rates on the 10-year goes down, which are yields. It's really confusing, but they move in unison. So when you hear bond market rates, those are literally inversely correlated with the bond market asset, which is the debt. So the debt goes up. If the value of the debt goes up, rates go down. If the value of the debt goes down, China selling US debt, the Fed dumping US debt, the US Treasury creating more supply, the value of the US debt is going lower, rates go up. So you want buyers to come in and buy US debt to get rates down. There's your lesson for you. Hopefully that makes sense. And this has all been this has all been what's driving the market lower is rates right now. So yeah, it's very interesting. You go to TLT. TLT is the ETF for long rates or for long bonds, and it is so oversold. I mean, damn, this move. I thought it would go higher. It didn't. What do you think about BRICS? I think BRICS is stupid. I mean, nobody trusts BRICS. They don't even trust each other. Here's the thing: BRICS, all the BRICS countries. What is it? Brazil, Russia, Iran, South Africa, and who's the other one? South Africa and China. They all have their debts in dollars anyway. So the problem with BRICS is they don't trust each other for one. There is no currency they've all agreed on. And then number three, they're all, all their debts are in US dollars. So if they decide not to pay their debts, it pushes the dollar up and crushes their currencies, and nobody wants to hold a currency that's falling. They also print more. They're not fiscally responsible. You want to hold some Chinese yuan, you want to hold Russian rubles? I don't think rubles, no. So at the end of the day, BRICS sucks. BRICS sucks, but they're gonna BRICS will is just another outcry, I think, to get off US dollars as a global trade, as the only thing you can use. And I think that's coming. I think that is coming, just not, not immediately. Maybe it plays out in the next 3 years. Really what's happening is there's all central banks are tokenizing their assets, and there's going to be a basket of currencies that are tokenized, as in they're going to have their own stable coins. They're going to have their own, every bank will have their own stable coins. They're all going to have their own private chains. And that's maybe where BRICS comes out with something. I don't know. But with Iran making this move, fueling the war in Israel, I mean, Russia doesn't even, like, I don't know. BRICS is a mess. Let's put it that way. BRICS is a mess. You need Brazil, Iran, which I don't think Iran's going anywhere. You need these countries to increase their technological capabilities before anybody takes them serious, right? You need that before anyone takes them serious. That's my thoughts on that, or else they're going nowhere. So yeah, now moving over to, actually, let me take a little break. Give me like a minute, and then we're gonna go over Chainlink. We're gonna go over crypto. Very triggered. We're gonna go over Chainlink. Like JP Morgan, big news. JP Morgan is now moving into tokenization, and it's gonna be huge. I'll be right back. Let's put on the theme music for you guys. Give me a second. Well, like 5 seconds, really. All right, let's do this one. Be right back. All right, we're back. So again, looking at Billy Pruitt. Hey Billy, look, man, it looks like you're a young guy. Go check out the newsletter. It comes out every Saturday. At least you can study kind of what I'm putting on paper. Check out the newsletter. And that's all I can say. I'm gonna come out with courses probably in the next couple months. I'm just waiting for my brother. He's a computer engineer, putting all this stuff together. Try to get some good content out for you guys so you can see how I process this thinking. It's taken me 3 to 5 years to understand how to think about and process the markets, and I'm gonna put that in a form that's digestible. So either way, Billy Pruitt, go check out the newsletter. That's free. That's free for you. Check out the YouTube videos also. Shelter was the news, trading economics about. Oh, Shelter, yeah. Yassine, we're gonna get to Chainlink. Yeah, the Shelter. So Shelter's still falling. It's rolling over. It just didn't fall as fast as people would have hoped. And the Fed talks about Shelter, and a lot of that issue is they need to keep building multifamily homes, which they are at a record level. So I don't see what the big issue is. But rent prices, the more supply, the lower rent prices go. And the builders have to keep building. They need incentive to keep building. So I think we're going to get some stimulus in Q1 to incentivize builders to keep building. They're building too big of houses, so nobody's buying them. Plus rates are too high. So I don't know. We'll see how that plays out. But it is Shelter. All right. Where's my newsletter? Go to my link, Billy Pruitt. Go to the TikTok. Just go to my profile, and then it should say there's a link on there. There's a YouTube link, and then there's a link to my to the newsletter. You go to my profile. You just register for the newsletter. Just use your brains, and you'll find it. Go to the profile. You'll find it, Billy. Anyways, good questions though. Good questions there. All right, so Chainlink. Let's move over to Chainlink really quick. So JP Morgan debuts tokenization platform. BlackRock is one of their key clients. What is going on here? There's new hype wave coming for real world asset tokenization. Citibank's already done it. Barclays, Swift is doing it. They're all getting into this use case. Chainlink is heavily pushing themselves as the #1 platform for I mean, they're already there, right? So you're seeing real world USD on, who is this? eToro. I mean, it's just showing some of the stuff here. Also this, who is this? K33 Research. I don't know who this is. They said yesterday, they came out with this yesterday saying Chainlink is positioned itself to be the key piece of infrastructure to connect blockchains with the outside world, and should provide and should profit from crypto's real world asset narrative. Remember, we've been saying this for a while. There's going to be a narrative that's going to drive crypto, which is real world assets or tokenization of assets. Chainlink is the #1 crypto to actually benefit from that. It's not Bitcoin. It's not well, Ethereum does benefit. It's not really Bitcoin though, because Bitcoin isn't. Oh, Sergey is okay. Sergey, he's the founder of Chainlink, co-founder of Chainlink. He's speaking at Goldman Sachs. This is the guy right here. You guys want to ask the questions when it comes to Chainlink. This is my brother, smartest dude I know in real life, like literally the smartest dude I know in real life. Ask him the questions when you say, "Hey, what is this coin versus Chainlink?" Ask him the questions, and he'll give you an answer. He knows, he understands that stuff. I don't speak that language, computer science language. I don't speak it. Right? I just read it and take a bet. Sergey speaking at Goldman Sachs conference today though. So he just spoke at JP Morgan. Is it Chase? Well, I don't want to call it Chase. He spoke at one conference. Actually, you know what? There was a video. I need to find it. There was a video that was actually talking about JP Morgan. They were doing a presentation and they literally said Link is the token. I didn't say Link is the token. They said Chainlink is going to connect them to, bro, I'm telling you, biggest banks in the world, biggest messaging system on the world. They're all using Chainlink. It's just that some people are going to get a little scared and worried. I don't know. I'm not sure, because there's a bunch of scammers on the internet. I saw a guy the other day who does XRP. He didn't even know what CCIP was. I'm like, bro, how are you in crypto? You don't even, you're a crypto guy. You're an influencer for on the internet, and you don't know what CCIP is, and you think Chainlink is only an oracle? These guys are trash, bro. Maybe not as a person, right? They're probably good people. They're probably nice guys. Don't get me wrong. But communicating information, nah, I don't think so. So Sergey speaking, anyways, yeah, I'm gonna get your comment there. This research basically said that, Chainlink is going to be the best to benefit from this. Swift has already, tokenized their assets. And what's happening here, guys, is that Chainlink is the organization, right? Or the company, wherever you want to call it. Link is the token. Okay, Link is the token. And CCIP is one of the technologies. One of them, they also have proof of reserves. CCIP is one of the technologies that they use. Not that they use, but that all these banks have to use, because it takes way too long. First of all, Swift's been working with Chainlink since 2014. Nobody really knew this behind the hood. The World Economic Forum named Chainlink as one of the top 100 technologies to change the world, and they're actually executing on that. So the point being here is, in order to tokenize all real world assets, right? Bonds, equities, equity, US treasuries, equities, real estate, you name it, any real world asset, to tokenize it, meaning you're putting it on the blockchain because it's a superior ledger. It's more efficient. You get rid of a lot of costs. The security is way better. So they're going to move it on the blockchain. That saves banks money. It saves them time, right? You can now settle money in minutes instead of days or weeks. You can settle it faster. So they're all moving to the blockchain. Crypto is a public blockchain network or community. The central bank CBDCs are private blockchains. So they don't want to own that. They don't want to use XRP. You think they're going to use XRP and trust the developers? They want to use their own blockchains. I'm not saying they won't interact with it, but they want to use their own private blockchains, and then they want to communicate with each other. Well, they can't communicate with each other because their systems are too old. So they use cross-chain interoperability, CCIP, to actually communicate that value, or to move assets across different chains, and then they can connect with crypto. So the enablement for the new contract, the new blockchain world, the one feature that enables, Web3 really is CCIP, Chainlink. And the token Chainlink is it's like the universal gas token that is needed in order to fuel these chains to actually communicate with each other. So we're really bullish on that. We'll do another video on it in the future. But Yeah, now you got JP Morgan. Now you have the DTCC. They've already been using it, and they actually transact quadrillion dollars of assets, right? Quadrillions of assets. Well, you take a piece out of that. That's a lot of revenue for Chainlink. Would you say here? Oh yeah, Jeremy, if oil drops, does DXY go up? They are opposite because oil's priced in dollars, but they don't always move opposite. So I'd say the correlation is like a 70%. It's not always, it depends on what's going on in macro. If the dollar spikes and oil isn't very strong, there's no narrative, oil should go lower, right? That's how it should work. And that's kind of what we're seeing here, but we don't know if it's that oil dropped and the dollar went up. We don't really know. We don't really care. We just know they move opposite at times. How big a percent of your portfolio do you have in Chainlink? Right now, I would say it's about 40%. It's a big percent. I'm making it bigger. The more that I'm seeing, I said this before, this is the best, this is the biggest opportunity I've seen, not just in crypto, but in investing in general. A very small project that, it's 4 billion market cap. That's a small cap in the stock market. It's backed by what? It's backed by Swift. It's backed by the biggest financial institutions in the world. Okay. As in they're all using it. Okay. It's a crypto. So when Bitcoin breaks out, the tide lifts all boats. And then liquidity, we're going to get to the Fed cutting rates in 2024 with the halvening cycle. Like, this is a great opportunity on a technical basis, on a macro basis, and on a use case basis. It is a secular trend. All banks are tokenizing their assets. Like, bro, it is the best opportunity I've seen. I'm not trying to force people I don't benefit from this. I'm just warning you, right? I'm just warning you. Do some research on it. There's some papers out there. You can look at a white paper on what it's doing, because this is a great opportunity. And guess what? Most people are going to scam you and say, hey, go buy a Dogecoin, go buy Shiba Coin. They have no use case. They have no use case. This has a real world use case, probably the biggest use case in the world, right? As far as a crypto. Anyways, answer that question. How old are you? I am 32, but I'll be 33 in February. So getting up there, you know what I mean? Getting up there, bro. All right. So yeah, that was the Chainlink news there. We got Sergey speaking. Very big opportunity going forward. And yeah, so let's look at those technicals. I think we covered that. We're trying to see if this is actually true. This is the revenue that Chainlink could actually accumulate. We don't know if it's true yet, so I'm not going to give you guys just say, oh yeah, look at this is going to make a lot of fees. Basically, what you have here is Apple, Microsoft, Saudi Aramco, Alphabet, Amazon. Their market caps are in the trillions. Their earnings, right? I'm sorry, their revenues, quarterly revenues are 300 billion. Apple, Microsoft, 200 billion. So they're in the hundreds of billions in revenue on a quarterly basis. Now let's actually, let's compare that to Chainlink here. What it could be, right? We're betting on what it could be. Fed Collins, the Fed is at near peak rate cycle. Bro, that's so bullish. Fed Collins just said the Fed is at near our peak rates. All right, so Swift's volumes, $5 trillion per day. That's a 1.825 quadrillion dollars of transactions annually. Okay, CCIP usage assumption. So if CCIP is at 1% of Swift's transactions, that's $50 billion a day of volume. What are the fee generations that are going to go into CCIP? Right, that's what this is. If you guys want this, I'll send it to you. Let's see if I could put this. Now, don't take this for fact. We haven't verified it yet, but it is just a model. It is one model to see. To just get a framework on what's happening here. And really, if you want to look 5-10 years out, what you're getting here is, if you take Swift, if you take DTCC, if you take JP Morgan, if you take all the financial banks, and then that's not even counting China and everybody else, they're transacting not a trillion, not 100 trillion. They're transacting altogether tens of quadrillions of dollars. We don't even know how big that is because nobody talks about it, right? And if Chainlink is going to collect a 1% fee, or even a 50%, 0.5% fee, well, the annual revenue for Chainlink is going to be the size of Apple, Microsoft. So that's kind of what this is an easy way, a simplification way to think about. It's collecting transactions, plus at the same time, That is literally just CCIP. We're not even counting everything else, which includes, let me show you guys what else what this includes. We're not even counting the services for Chainlink, because Chainlink is really not just an Oracle. People are going to tell you it's just an Oracle. It's more than an Oracle. It is a computational service. It does market data feeds. Okay. It does functions. I don't even know what that is. DECO, zero knowledge proof. That's going to be huge in voting and social proofs later. Proof of reserves, proving that a bank has the assets that they say they have. And then also it does verifiable random functions. That's kind of confusing. Automation and cross-chain interoperability. So it has a lot of services, and it's like the internet. It's like the internet protocol that allows all these. I mean, it's really complicated, but to keep it simple, CCIP is the big daddy right there, right? That's the big daddy CCIP, and that's gonna make you rich. It's gonna make you rich if you get in it early, down the road, and you manage your risk correctly, right? No financial advice here. My opinion strictly. So yeah, do the research for yourself. I've been adding to my link position whenever price drops a bit. Nice, Asan, keep it up. It's gonna be big, man. I think it's gonna. I mean, look at the research. J.P. Morgan, XYZ. You ain't got to hear it from me. Read the damn research. People just don't want to do the work to read, or they're stuck on their narrative. Like, there's a reason why I'm selling ETH to buy more Chainlink, because I'm like, damn, this is big. I could be wrong. Maybe Chainlink, it takes a while and ETH breaks out, but I'm taking that bet, based off what I'm reading in the research. I'm not going to get rid of my ETH position, but I am definitely, allocating a little more there. So we'll see. And then also maybe the price comes down to $5. Let's take a look at those technicals. Actually, let's look at the technicals here. What do you got? 101. Okay, cool. All right. So looking at the technicals for Chainlink, and if you guys have any other questions, concerns, let me know. Throw it in there. Crypto. First thing I want to look at too is the total crypto market. Okay, total crypto market is in a accumulation. It's in bro, I cannot talk. It's in a accumulation phase. Okay, we're accumulating crypto in general. Bitcoin's still above 25K. I mean, it's gonna get close here where it just starts breaking out, in my view. Ethereum making new lows. I think it's a buying opportunity. We're still above anchored VWAP. Let me take these moving averages off. Okay. Now for Chainlink in general, yeah, this is the price. Okay, it is consolidating here. Can I make this bigger? Yeah, let's make this bigger. There we go. So it is consolidating as we speak. Let's move over to the weekly chart so you can see the thickness first. So it's accumulating, right? This is accumulation phase. Look how big, look how long it's been. It's been here since May of 2022. So that's about what, a year and a half of accumulation. And if you go back to the past, it would come back down to $5. It was here in 2019. So we're going on 4 years around the same price. Well, today it would be 3 years, 3.5 years, almost 4, probably about 3 years. So once it breaks out, I mean, it's going to move. It is going to move. I think the breakout point is going to be somewhere around $9 with the narrative behind it. It is starting to squeeze here. You can see the ascending triangle starting to form here. So maybe we come back to $6, could come back to 6. It'd be a good buy zone in my view. If you're looking far out, if you're using disposable income that you don't need, right? It's not a trade. This is not a trade. This is a hold until the end of the cycle. Okay. Now we look at Chainlink versus Bitcoin. It is pressing against Bitcoin. It's almost breaking out against Bitcoin. It's going to start gaining value against Bitcoin on this trend. It's not there yet. It's almost close, right? If you look at Chainlink versus ETH, it's already broken out against Ethereum. It's starting to make new highs against Ethereum. So you got to keep your eye on that. It's going to start moving here. And then, yeah. And then is this yeah, this is Chainlink versus ETH. Another way to look at it. It's breaking that descending triangle. Now, these aren't always the most reliable charts because crypto is pretty wild, but you do see the narrative behind it. It's a solid narrative, right? Solid catalyst incoming. What is your price target for the end of the cycle? I don't do price targets anymore, Asan. It's hard. I've done price targets in the past. I said Bitcoin will go to 220K back in 2020, and it went to 69K. Because inflation started to break out. The Fed announced that they would tighten rates. So more so now, this is kind of what got me into this understanding the macro more, is I don't do price targets. I do technicals, macro. I like to combine technicals, macro, and the fundamentals. So what I would say is If you're looking at I think the overall market for crypto, a good model would be it goes to 10 trillion. Right now we're at 1 trillion. So let's take a look at this. The overall crypto market is at what, 1 trillion? I mean, the last time that it made a low or it started to break out, let's say the last cycle, the last cycle it got as low as 100 billion, and it went up 2000, 2500. So it did a 25. Is this a 25x? Am I tripping? Yeah, it did a 25x. Yeah, 25x. So I mean, that's a big move. Let's stay conservative and say from here at a trillion, we move to 10, right? $10 trillion, especially with the BlackRock coming online, buying Bitcoins, tokenization of all assets. I mean, this is huge. So I think we go to about 10 trillion. That's just a model. It's not a promise. And I think Bitcoin can go to 150K. I think if the macro aligns perfectly where you get the Bitcoin halving, supply comes offline, you get supply coming offline, that puts price higher, demand comes in, pension funds, all these different funds own crypto. There's no price pressures lower. I mean, it can go to 250K. Some people say 500K by 2025. So it depends on the macro setup. It depends on global liquidity. It depends on where rates are at. Once rates, I think when rates, I don't want to say rates peak, but once on this next cycle, once rates bottom, that's where I'm going to get a little bearish. When I see price action show bearish divergence, I'm going to get more bearish. When I see the ISM manufacturing cycle peak, I'm going to get more bearish. So I'm going to align all these different variables to see, okay, when am I getting out? When am I going to collect profits and wait for the 80% drop in Chainlink and Ethereum? Bitcoin, I don't know if it drops that much because of the, it depends. It just depends how wild it gets. So that's what I'm looking at. That's what I'm looking at for the price target. 10 trillion. So yeah, no real price targets anymore. There's too many other variables going on. And for Bitcoin, I'm gonna say 150. Like if we do the Fibonacci, right? You do the Fibonacci retracement, it tells us we should get up to 100K at the minimum, and then at the maximum 200, maybe 220K. And if that looks too crazy, I mean, let's compare the last cycle, which I don't think Bitcoin's going to go up that much again. It went from the Fibonacci, took it to the purple, almost the max. We almost got there. I mean, we did pretty much get to the max. So let's be conservative and say we go to the blue, a little more conservative. You got Bitcoin basically running to about 100K, right? 150, a little more compelling. Now, the ETF's been the biggest catalyst. So if you get the ETF, bro, this might be the biggest bull run for Bitcoin because of that ETF opening up all that liquidity, hedge funds who can literally just buy the ETF. So a lot of potential there. This could be a gigantic bull run. Tesla to 500 by Christmas. Oh, you guys want to look at Tesla? I like that. That's what I'm talking about. Tesla to 500. A lot of people are dumping on Tesla right now too, because all these, oh, it's losing market share. But people don't even know what they're talking about. Losing market share in what sense? You think people are buying more Model Ys? The EV revolution is picking up. Just because there's more cars created doesn't mean that they're losing market share necessarily, because it's going to come down to the winner is the winner. Look at this trend. Once we get above this trend, it's going to be nasty. So, bro, let's do the Fibonacci retracement on Tesla. Shoot, that's a $500 Tesla. I don't know about by Christmas. I think we go to all-time highs by Christmas or somewhere around there, like 400. 500 blow off top, possibly. Maybe you're right, bro. I'm not going to doubt it. You never know. But this is a huge wedge pattern. I mean, if you look at technicals, this is pretty much insane. A very insane setup, especially with the RSI. It's not even oversold yet. And if you go to the daily chart, it's coming off. It's still grinding down there. So, and then when Tesla gets oversold, it gets oversold. So that's man, I like that chart. Let's go to that monthly. What does a monthly look like? Yeah, very strong buyers. Tesla to 500. Scott Houston. What up, Scott Houston? What up, Scott Houston? Let's turn on the moving averages, see what we're looking at here. Look at this divergence for Tesla. Okay. You have the you have the 200 daily moving average. Uh, what is the name for this? Starting to get vertical. Ah, damn, I can't remember what the name is. Um, Too many things in my head. Don't make excuses for yourself. What is it? And I need the stupid button. Anyways, when this starts pointing up, right? When it starts to point up, the moving average is showing you a lot of the momentum. So you don't want to just see it above the 200 daily moving average. You want to see the moving average actually point up. The 100 is pointing straight up. The 50 is a little more stalled here. So the long range averages are showing you, are telling us that, man, 250 is the bottom here. I think I'm going to buy another call at 250. And everybody's I think Wall Street is looking for the bottom. What are the downsides you see on Chainlink, just to see if there are any? Yeah, there's always downsides. The downside is the project takes too long. Actually, that's a better question for my brother. The downside is it takes too long. The downside is, I mean, you'd have to ask him. I don't even know what the downside. I couldn't go into like depth on what the downside is. I would just say it has less downside than other altcoins, as you call them. And before, the downside is, institutions don't want to pay for CCIP, but at this point they kind of have to, because there is no other technology to actually tokenize. There is no other, technology to actually get these markets to tokenize, or to actually not tokenize, to get these private chains and stable coins to actually interoperate. There's not another project. They can't do it themselves. They're too far behind. Nvidia looks like a huge bear flag. Kathy Wood says, I don't know about 1,000 by Christmas though, Scott. I don't think she says 1,000 by Christmas. I think she says 1,000 by what, 2025? I think. Or 2027. Yeah, it depends if they execute. I mean, they're dropping their, here's the problem. Everybody's like, margins are coming down. Well, like the cost of the battery is also coming down. The cost to create a Tesla is falling. So margins might actually be bottoming out here. And if that's the case, Wall Street is going to bid. This thing is going to explode. ChargePoint. What is the ticker for ChargePoint? Kashif. I don't really like ChargePoint because the Tesla supercharger network, it's like it's like a, what do you call it? I can't think of the name. It's or the phrase. It's an all in or not, meaning people are going to use Tesla supercharger networks or they're not. They're not really going to use, people want to use one standard, and then the Tesla supercharger network is one standard. So I don't really like ChargePoint. I mean, I'll take a look at it, but oh my goodness. I feel bad for whoever was buying this. I tried to warn them. I was like, hey, ChargePoint could break out, but I mean, Tesla is it's gonna eat these guys up, because they're trying to make businesses based off what Tesla's already dominating in. And eventually, hell no, do not buy this, bro. I know it's dipping, but do not try to own this. Like, that's not even a falling knife. That's a falling sword. Don't even touch it unless you want to see holes in your hands. So you said Nvidia looks like a bear flag. Here's the thing: Nvidia has a lot of. It looks like a bear flag, but it really doesn't matter, because Nvidia is one of those names that has so much juice in it. So many fund managers have to own Nvidia. I mean, it doesn't. It's really hard. It looked ugly for a long time. Look how ugly it was. Ugly. It breaks down, goes higher. Nvidia, don't doubt Nvidia. I always say buy on the very sharp pullbacks. I'm not owning it. I'm not interested. To me, it's a hyper play. It's up too much. I think Tesla has a better opportunity here. But yeah, Nvidia's on this trend. It's on a very clear trend. Here's the all-time high. I might as well take that off. Nvidia's on a trend here. Look at that. It should break back down, but there is no shoulds with this. Like I said, fund managers have to own this. You get fiscal policy coming in the fourth quarter, which is basically stimulus checks to Nvidia. Everybody needs AI. Everybody wants the chips. Who knows? Could keep pushing higher. Would you say all Huawei gas stations are adding Tesla superchargers all over the eastern states? Where are you from, Hassan? I remember Huawei when I went to Tampa, Florida. I'm in Arizona. We don't have Huawei's. We have damn, I can't even think of the guy. They look just like Huawei's, but we don't have Huawei's. But yep, they're using the Tesla standards. I still think the best stock in the market is Tesla. The best crypto in the market is Ethereum. I think Ethereum is a better bet than Tesla, or I mean, than Bitcoin in my view. Doesn't mean you shouldn't own Bitcoin, but if you had to take one, I'd take Ethereum because there's a lot of features. Tesla's, I mean, Bitcoin's definitely the safer bet, but the biggest opportunity is probably Chainlink and in the stock market, Palantir's a good choice, but they have a lot of headwinds. I still want to keep it with Tesla, especially if you're trading options. If you're not, I don't know. Palantir might outrun it. Oh, you're in Maryland. Okay, what up? Shout out to the East Coast. I'm in Scotland. Dang, Scott from Scotland. All right. Scott Houston, bro. I thought you were Scotland from Houston. I think most index funds have a 2 to 4% Nvidia post. And check this out. Out of the Mag 7, Apple, Amazon, Google, Facebook, Tesla, Nvidia, possibly Netflix, Tesla is the lightest weighted. So like, bro, it's the lightest weighted. It's the most underappreciated because it's very controversial. It's going to take out, I mean, look at Ford and GM. They can't afford for these strikes to continue. You go to Houston on holiday. All right, Scott in Scotland goes to Houston on holiday. All right, bro, be careful in Houston. Crime is crazy over there. I think my brother wants to go visit, and I'm like, hey, I don't know about the Christmas days because you know how it is. You better look broke over there. Out in Maryland. Shout out to the East Coast. Yeah, so that's what we're looking at. Look at this beautiful AMD though. AMD on the right off the 200. Now it's above the 50. So, some rejection there at the 100, and AMD is setting up. I really would take this, but I'm really deep into Tesla right now. And I don't want to try to create content and look at two stocks at the same time. Plus, I don't know AMD's model that great, so I just know it looks great technically, but you never know with chips. That looks good. It could break down and then really find support here at 250. I think if Tesla breaks down, look for 250. If it breaks down, look for the touch at 250. That's what I'm thinking right now. The touch at 250, multiple supports, the 50-day moving average, the 100-day moving average. And then let's go to these quarterly moving averages, right? If you want to see the quarterly, this is basically the quarterly is going to be the last 1, 2, and 3 days of quarters of earnings. And the way you do that is just change the 50 to 12. So you're looking at 12 weeks, which is the last quarter, 26 on the 50 on the 100, 26, which is the last 3 quarters, and then the 40, which is the last 4 quarters of earnings. So you change those up. Now and this has to be on the weekly chart. Now you're looking at the quarterly moving averages. I call these the quarterly moving averages because markets, especially for equities, they move in quarters, right? We're above the 200, 200. Look at me, stuck with the language. We're above the last 3, the last 2, and the last 1 quarter of earnings. We're above all of them. Really good setup here. Really good setup. It's going to come down to those earnings. Plus, you got Cybertruck about to eat up all Ford and GM, and plus they can't produce trucks at the same pace. Thoughts on Apple? Apple looks good. Apple is at an inflection point. And the fact that it just bounced off the 200, I think is pretty bullish. Look at the quarterly moving averages. It's starting to get above them. On the daily chart, I mean, it's basically, let's just take this off. It's basically Apple's in a bull flag. It looks just like the S&P, or it looks like NASDAQ. It's in this bull flag. So once it starts ripping, I mean, I think fourth quarter rally. Cybertruck gappy panels. Oh, I'm not a truck guy, so I don't really know. Elon's got so much confidence. He was talking of buying a house. Oh, buying a house. He's $100 billionaire. So, I mean, buying a house is not really much. Well, depending, here's the checklist. Let's go over the checklist before we get out of here. Let's go to the checklist. This is what you need to, actually, you don't need to do this, but I want you to just learn. I want you to Dang, dude, stop pinging me. Golly. I want you guys to at least keep this in mind just for educational purposes. Heading into the fourth quarter, something's probably going to break at some point. Maybe not the first quarter, maybe second quarter. And regional banks, commercial real estate. I think it's going to be regional banks or commercial real estate. Okay. Um, consumer dependent stocks like who is it? Target falling apart, Budweiser, like certain consumer stocks might break. But that's probably going to do with the banks anyway. Small caps, interest rate sensitive companies, they kind of suck. Now, who's going to benefit in the fourth quarter in this rally? It's going to be premium stocks. It's a stock pickers market, and I think we're looking at premium stocks here. Stocks that have pure revenue growth, so there is demand for the product. Apple, Amazon, Google, YouTube just surpassed Nvidia. Who did it surpassed Netflix, and I don't know who else for most video viewage usage for video for teens. So YouTube is growing faster. Google looks great, and that's just one segment, obviously. Meta, demand for the product. I mean, come on, you guys are all using Instagram or WhatsApp or Facebook if you're older, right? Pricing power stock, so they have a strong brand. You're always going to buy them. Coca-Cola, and I'm just kidding. Don't buy Coke. Coke needs to go to zero. It's poison. Companies, it's a good company, but based off of poisoning people, in my view. I'm a health guy too. I don't just do stocks. My first niche is health and fitness. So anyways, pricing power stocks. Apple, you're gonna buy a new iPhone, right? You're gonna jump on Instagram. You're going to buy a Tesla, and I'm just kidding, not yet, but you probably will. So pricing power, increased efficiency. So those who can retain margins, right? Price cutting. Look at Tesla; they can cut prices. They're not worried about their about the business because they also are dropping. They're going to gain demand from it for one, but they're also the cost to produce Tesla is dropping. Okay. Low debt, high cash flow companies, especially in a rate environment that's high, when inflation is moderately sticky, then more cash, low debt, you're going to be good. Share buybacks, they can buy back their own shares. That's huge. Why? Because this one I had to think about a week ago, and it really made me think, damn, this is more bullish than I thought. If you take your cash, you buy back, two things you do with your cash. You shove some of it in money market funds. Why? Because you're going to collect interest. With that 5% interest, you can pay off your debts, right? You're going to use the cash to fund your own debt. We've never had that before in the stock market. So this is a new way, a new way a new way of financial engineering. Number two, you take other cash, you buy back your own stock, you remove the shares, so you make it more scarce, less supply, and at the same time that increases your EPS. It looks better, right? That's huge. And we went through that. Disruptive innovation, secular adoption, EVs, blockchain, AI, robotics, genetic sciences, even though we haven't really seen that kick in yet. The Apple headset, whatever it is, AI is really the big one here. And then whoever benefits from fiscal policy, which is the Inflation Reduction Act, renewables, energy storage, renewables, EVs, chips, right? Well, actually, that's the CHIPS Act, and then the infrastructure. So builders, which is why materials and industrials are up right now. So Caterpillar, Deere, I'm not really into those stocks, but definitely that's who's going to benefit. So those are the premium stocks. They're not actual stocks. I'm not going to ever tell somebody you should buy this stock. I'm just saying, make sure you filter that process. If you're holding it, if you're investing, you want to filter through that process. If you want to see that process, I will be posting it in the newsletter, and I'm gonna post it on Twitter first. I'll post it on Twitter, and then I'll probably do that right after this. I'm gonna post this on Twitter, and then obviously the economics, the macroeconomic cycle. Keep your eye on the economic cycle, the fundamentals. Earnings are going up, and I think we're golden. We'll be back tomorrow. Tomorrow's Friday. We'll see how the market digests this new earnings report. Oh shoot, I didn't even see that. Apple's at the top of the channel. Do you think is going to reject here or is going to punch through? Depends on rates. It really depends on rates. When does Apple report? Apple reports November 2nd. So that gives you 2 weeks. I would watch Qs. If the Qs break out, Apple breaks out. Simple as that. USA banning TikTok, so YouTube's going to benefit a lot. Are they? I don't think the US can ban TikTok, maybe from government officials. I don't think they'll ever do it for the US, for the citizens. I think it's just there's too much at stake. If they do, yeah, but I doubt they ban it. Would you say Tesla? I mean, we just went over Tesla. Technicals, we talked about a lot of stuff on Tesla. Less than ever. Retail will lose as banks make more. Yeah, and then look out for those bank earnings tomorrow. We got JP Morgan, we got Gold, I don't know if it's Goldman Sachs, but we got JP Morgan, we got BlackRock earnings tomorrow, so a lot down the pipeline. Um and I think that does it for the show. I would just keep in mind here again, the inflation report wasn't really that bad. It was pretty solid. It was actually pretty solid. Oh, I probably do, Billy. Yeah, I probably do need to take a break. I need to take a break. Yeah, you're right. Appreciate it. Thanks. Um, I need to eat some protein. Try to keep the muscle up. So you got to keep eating the protein. That's what I need is some protein. I'm about to have some eggs right now. I'm about to do about 6 eggs. Uh, put some chipotle sauce on it. Tastes like I'm half Mexican, so it tastes like chorizo and eggs. If you guys have ever had that, you just throw some chipotle, some sea salt. Tastes like chorizo and eggs. I'm about to eat that right now. Hey, I try to go all out. I want to give you everything I got. So yeah, I'm probably need to take a break. A is heavily weighted by Apple. Oh, Qs. Yeah. Qs are heavily weighted by Apple, right? So vice versa. If Apple breaks out, the Qs probably break out. Also, let's say the Qs break out from Amazon, Google, Meta, it's gonna bring Apple higher. I think it's not always the case, but I think that'll be the case. So, hey, nice chatting, Billy. Go subscribe to that newsletter, man, so you can at least be informed on a weekly basis. You can start reading, get into the flow of things, and just stay up with the content. I'm on YouTube pretty much Monday through Friday, sometimes on Saturday, usually giving as much as I can. All right, guys, that's all I got for you guys. We'll check you later. Don't forget to work on your diet, your exercise, your improvement. Stay focused on your goals. Don't do nothing stupid. Go get a workout in if you haven't worked out. Eat more protein, eat less carbs. I know some people don't do that, but it's better for you. I'm always reading new research on that. Um, also, stay blessed, and we'll keep up with this war too. Okay, I think it's going to end swiftly unless Iran gets involved. This is the big black swan here. The big black swan is let's kind of go through this. First, you have in the south, you have Israel, right? You have Israel, obviously, the Jews, and hopefully we don't get banned for saying the Jews. So you got Israel. They're getting attacked from the south, or they're fighting a southern border. It's really south. What would you call it? Southeast, a southeast border, Gaza. They're fighting the Hamas, right? So very a terrorist organization as far as people use. I don't know the political terms. I'm just gonna gun shoot it or shotgun it. What I think probably get banned if I say it again. Take a protein, avoid carbs, become shredded. Yeah, take more. I mean, also you're gonna burn more fat if you have protein in your body. You're gonna burn more fat because it takes more to burn protein. It takes more energy to keep muscle. So that's why it's a good thing for your testosterone, your focus. So you got the Hamas in the south. You guys probably heard this already, but I want to speak it through so we stay up to date. You got the Hamas in the south. They're fighting. They can take care of that. They can destroy them. They're blowing up Gaza. Moment of silence. Pray for the people in Gaza for sure, and the Israelis, right? All the civilians, all the people that are the Palestinians and whoever's innocent, right? The civilians, like it is what war sucks, but say pray for the families, for the people. Hopefully everything doesn't get worse. And then in the north, you have Hezbollah starting to attack. I think that's like southern Lebanon and Syria a little bit. And if it stays right there, if it doesn't escalate, if it does escalate, you might get Syria involved. But then Saudi Arabia is like, hell no, you better not get involved because we're going to get involved. And then you have Lebanon, who is also controlled by the damn Hamas, and that sucks. So really, the U.S. sent a ship over there. It's crazy. It is getting crazy. We just hope it doesn't escalate. But the fact that Israel's such a small territory, it shouldn't really expand that much. There's probably a deal, in the workings right now. Who knows what China? I know people are saying China is going to try to invade Taiwan, but I don't think the U.S. is really sending a whole lot of too much over there where the China would do that. Plus, China's trying to recover. Their economy is not that strong. Usually, you get invasions when economies are strengthening, not when they're weakening or when they're still trying to find their footing. So that's my view on that. We'll stay up to date. Anyways, again, you guys stay blessed. Appreciate the time. And yeah, thanks for investing in me. I'll invest in you guys as much as I can. Stay blessed, and I'll catch you tomorrow.